Look, we're all different people from different backgrounds, different careers. Like if someone's new or they've never bought their first investment property, how do you find working with people who may have some issues getting finance from their own bank?
Some high street banks are in a position where they can be a little bit choosy about who they give mortgages to. Being whole of market, I've got access to the high street lenders, but I've also got access to the specialist lenders as well. Once I've had a full interview with my client, I can then research the market and recommend the most appropriate product for my client's circumstances.
So there's uncertainty with mortgage rates and interest rates. Will they go up? Will they go down? Where does the future hold? As investors and landlords, leverage is one of the biggest tools that we have in our toolkit. So we need to get it right. Let's hear from one of our key members in our power team and what they have to say about financial leverage and the mortgage market in the future. So hi, it's Dwayne here from Property Results. So I'm here with Darren Yule, and I'm really pleased to be speaking to him at the moment because Darren Yule makes up part of our power team. So when investors or clients work with us, we've got a really good network of professionals that we work closely with, and Darren is one of those. So Darren, do you just want to give a quick introduction of like your background and what you do and how you even became a mortgage broker?
Certainly, Dwayne. So my name is Darren. I'm a mortgage and protection advisor. I work for Approved Mortgage Solutions. Before I became a mortgage advisor, I worked for a high street bank for 20 years. The last 10 years of my employment with them was as a premier relationship manager in the branch network. What my job entailed was looking after a portfolio of high net worth clients, helping them with their financial aspirations, their financial requirements, and building a relationship with them so we could work going forward on their plans. Unfortunately, a couple of years ago, I was made redundant and I had to decide my future. At the time, I was 42 years old. I had a wife, 2 kids, a dog, a mortgage. So I really had to think about what I wanted to do for the rest of my career. Yeah. Mortgages was just a natural transition. So I decided to become a whole of market mortgage broker. The reason for that is in my previous role, there were many situations where I wasn't able to help a client because of their circumstances and because they didn't meet the criteria which we had to work with at the time. Being a whole of market mortgage advisor gives me access to a lot more lenders, gives me access to a lot more products, and ultimately allows me to help a lot more clients.
And then we had an example where an investor only knew to go to their own bank that they bank with. So it's quite interesting to hear that you're open market and available for all lenders. Is it how do you find that compared to when you worked for the high street bank?
It's very different, and to be honest, I was very surprised when I first became a whole of market mortgage advisor. I'd come across cases where on first glance I would think, well, I don't think I can help, but that was just me thinking back to the criteria that I used to work with. And it's amazing how many lenders out there are able to help clients in so many different situations. What you say is correct. I think the natural transition is that if you bank with a high street bank, for example, you'll naturally go to them first. But some high street banks are in a position where they can be a little bit choosy about who they give mortgages to. Some lenders don't necessarily want to stray into buy-to-let mortgages, for example. They might not want to stray into more specialised buy-to-let or specialised residential products. So being whole of market, I've got access to the high street lenders, but I've also got access to the specialist lenders as well. And once I've had a full interview with my client, I can then research the market and recommend the most appropriate product for my client's circumstances.
Look, we're all different people from different backgrounds, different careers. So like if someone's new or they've never bought their first investment property and they might be sat on the side thinking, well, you know, my bank is saying I can't buy, for example, in a limited company, or my bank won't lend it to me. Do you think that's a kind of restriction, or do you think how do you find working with people who may have some issues getting finance from their own bank?
Lenders ultimately want to lend. Lenders adapt their products according to trends in the property sector. So, for example, what was once a specialist product like a HMO, for example, is now becoming a bit more mainstream. Holiday lets have become a lot more prevalent of recent years than they were 10, 15 years ago, for example. So again, lenders do often adapt. And as I say, what was once a specialist product is now mainstream. So having access to the whole of the market, I can find the lenders who are prepared to lend under different circumstances to different client types and also for different property types as well.
You know, cast our mind back a few years ago, it was like COVID. A lot of banks were like very conscious of even giving finance. And I think although we came out of that and the market improved, you know, if you cast our minds back to like last year, even the end of 2022, market seemed to change quite a lot. How's the market looking now?
What I found is that landlords are also adapting. So lenders adapt their products according to the market, but landlords are also adapting. So rather than the standard AST rental agreement, landlords are now looking to maximize rental profit. They're looking at HMOs, serviced accommodation. Some landlords are looking at low value properties with the option to refurb, release a bit of equity from the higher value that property achieves. Again, lenders have also adapted. So if you were once looking at a low value property, maybe in a bit of disrepair, the normal route would be a bridging loan, potentially then a remortgage after that. A couple of lenders have got products which are called light, medium and heavy refurbishment products. Basically what they do, they will estimate the property value at the end of the works. After looking at your schedule of works, they will offer a product which allows you to buy the property, then after it's been refurbed, will allow you to remortgage it. Now, the difference between the standard way of doing it in the past where you bridge it and then you mortgage it is that with these new products, they'll value the property before you've actually started the works. So you'll submit your schedule of works, their surveyor will estimate the property value at the end. They will then look at an end product. So you've got a smooth transition. You buy the property with the funding from the same lender as your remortgage with. And from day one, you know exactly what your fees are going to be because it's all planned out in advance. Now, as a landlord, that's quite important because it allows you to budget effectively and it also helps you with your forecasting too. So if you know from day one, if you buy this property, that you're going to spend X amount refurbing it, but at the end, it's expected to achieve a certain value and you can release a certain amount of equity, you know straight away whether that's something you want to do or not, rather than taking a risk of bridging it, but then maybe not achieving the property value that you were expecting and not being able to repay the bridge or having to maybe take a loss.
So that's a really interesting product. Is there just one or two lenders doing it, or is it quite readily available?
At the moment, there are only a couple of lenders who do it. However, it only takes a couple of lenders to start one product and other lenders start to look at it and want a piece of the market share. So as you can imagine, if there's a high demand for it, then other lenders will soon catch on and what was once specialist becomes mainstream. Just like what I mentioned before about HMO products or holiday let products becoming more mainstream than they were 5 years ago when they were maybe a bit more specialist.
Yeah, because in today's marketplace, with our clients, a number of them are buying with just as a standard turnkey buy to let. But I think with this marketplace, with rents going up, prices, especially in Northeast, kind of stabilizing, some have gone down. You're seeing really good opportunities where you can buy properties at a discounted price, got really good returns. You put some money into it, and then you can refinance. So I think that product should be really popular going forward. How do you find those lenders? Are they challenging?
All lenders want to lend. That's their business. And if they don't lend, they're not achieving their business objective. They're not making profit. If you've got a well-packaged mortgage case, then it makes it a lot easier for the lender to assess the application. So as a mortgage broker, part of my job is to make sure that I can preempt any questions a lender might ask. So as well as knowing what documents they need, it's also about knowing if that particular lender requires any additional information. So I often speak to a lender before an application is submitted, just to double check that there isn't any information I haven't collected, so that once the application goes in, whoever's underwriting that case knows exactly the information that we need them to know for the mortgage application. So it's all about preparation from the broker. And, sometimes I will go back to a client multiple times and say, sorry, I need this. I need you to resend that because it's not in the right format. But ultimately, it is just so that we can aim for as seamless an application process as possible without the lender having to come back to us on numerous occasions asking additional questions or asking for additional information, which ultimately delays the mortgage application.
So it's like get it right first time and save the hassle later on, really.
That's right. So if you prepare well, then it makes for a more seamless application.
Can you share one or two examples of challenging cases that you've had? Because I think, especially when you're new or you might pull one or two, you might be thinking, and especially when you're investing outside of your area, you might be thinking, well, how easy is it going to be for me to get a mortgage? Can you share examples of challenges that you've overcome or challenging situations?
We all experience challenges with some applications. Some are quite straightforward, some are more complex. But what I will say is that as a mortgage broker, I'm just one cog in the wheel of the bigger system. So a client might have an accountant, a client might have a solicitor. Now, naturally, I can't give tax advice, I can't give legal advice. So if a client is looking at their future plans, I might work in conjunction with their accountant in order to be able to recommend the right product. Might be the client has been advised by their accountant to own property via a limited company, in which case I'd be looking at limited company mortgages. It might be that the client has got a specific setup from a legal point of view, in which case I will take that information from their solicitor and I will carry out my research accordingly. So it's all about working together for the benefit of the client. So as a mortgage broker, yes, it's my job to source a mortgage, but if there are other elements attached, then other professionals need to be involved as well. But we all work for the client and we all work for the client's best interest. So as I say, I can't give tax or legal advice, but that sometimes does play quite a big role in planning your future strategy as a property investor.
And so just kind of wrapping up, what would you say is maybe a few key takeaways or one or two takeaways that you would say to an investor who's maybe they've owned their own house, but they haven't invested in property and they're going to take the leap where they might have a bit of nervousness about investing outside their area, in an area, for example, like the Northeast where we focus on?
Engage a mortgage broker at the earliest opportunity and at the very start of your journey. The reason why is that if we, as a mortgage broker, if I know what your plans are, what your preferences are, and I know what your circumstances are, so for example, you might decide to own a property personally, you might decide to own it via a limited company. Again, that will help me advise you as to what mortgage product is most suitable. It might be that on discussion, it transpires that you need tax advice, in which case I would then advise you to seek tax advice and then come back to me when you know exactly what your plan is going forward from a tax perspective. And again, that will help you to advise you on the most suitable mortgage product. So each client's different, different personal circumstances, different aspirations, different attitudes to risk, etc. So I always say, engage a broker. We'll sit down, we'll talk about what it is you're looking to achieve. We'll talk about what your personal circumstances are, because different lenders have got different requirements. Some lenders require you to have a certain income in the background, a personal income, before they'll look at rental properties. Some lenders will only lend to existing landlords. So if you're looking at a HMO, for example, or a serviced accommodation holiday let, then some lenders require you to be an experienced landlord, so they would expect you to already have rental properties. Some lenders expect you to own your own home, etc. So again, it's just about me finding out what your current circumstances are, what your plans are, and then making a suitable recommendation based on you as an individual. So all clients are different. My advice is tailored to the client, their circumstances and their requirements. But certainly speak to a mortgage advisor in the very early stages,
to kind of summarize, the key takeaways would be like, start early, do the prep work up front. Yes, you might be asking a lot of questions. However, that just sets you up for when you go to bat for that investor to raise their finance. And actually, lending is freely available and lenders want to lend. And as a result, don't necessarily think you can't get finance. Have a good conversation and then come up with a bespoke plan to raise that needed capital.
That's right. Yep. As you mentioned there, Dwayne, lenders do want to lend as long as the client meets the criteria and as long as the property is suitable security, then that's my job to look at that with you to make sure that you do meet the criteria and then hopefully make for a seamless application process.
Perfect. Excellent. So I think just wrapping it up, I think I appreciate you having this conversation. I think it will really benefit any type of investor who's starting or looking to scale their property investment, and maybe they've got a smaller amount of capital to invest with, or maybe they've always invested with cash, and just knowing what's out there and knowing that there's strong individuals that they can work with to help them with their property investing will really help them give confidence in their property investing. So Darren, I really appreciate you. We'll definitely be talking on a regular basis just to make sure clients hear more about what's available in the marketplace.
Perfect. You're very welcome. Thank you.
Thanks, Darren. Speak soon.